Okay, the recorder is set. Welcome everybody to our Tuesday members meetup. It is June 2nd. What I wanted to do today is, of course, we always go through our entry and exit walkthrough, and I've had a number of questions come through recently about questions around measured moves and you know, had some screenshots that was this a measured move? Is this a measured move? And I thought we've got quite a few new members. By the way, welcome to all the new members. If you have any questions as we're going through here, two things: you can either raise your hand and I can unmute you. We can answer your question that way, or you can type it in the question box. During my presentation, if I see a question, I will stop and answer it. But we always go through the entry and exit, and I'm going to spend some time going over measured moves and how we get the Fibonacci's from those measured moves. And I want to make sure we've got that measured moves locked in, because a lot of times you can have the trend is going up, but you'll have an intermediate measured move that retraces back, but still makes a higher low, and it'll continue to the upside. So what I'm going to do is I'm going to look at a chart on Visa, and we're going to go through the last 3 months of trading on Visa, not trading, but yeah, the last 3 months of the price chart, and go over all the measured moves and all the Fibonacci's and what we could have done. Of course, then we've got time to go over all our current trades, and then there's always plenty of time for questions either now or later. And Steve, I see your hand is up. Let me unmute you. Steve, question, comment?
Well, I've got a question, but it's for later after we talk about the measured moves. So this isn't the time right now.
Okay. Let's see. If you just keep your hand, I'll tell you what. Put your hand down, and when I get to that part, raise it, and we'll get to you then. All right. Good deal. Good deal. Okay. The entry and exit walkthrough, and that's the whole strategy right here. If we adhere to these rules, you know when to execute a trade and you know when to get out. Now, there are times, and we've got a time right now with Danaher, DHR, where we got in and it immediately went in the other direction. Well, we had this trade all the way through 18 September, and sometimes when you first get in a trade, even if it goes against you, sometimes I will stay in and let the trade evolve. And I'll talk more about that when we get to all the trades. But this is our strategy right here. And first of all, when the price moves to the plus or minus 1 or plus or minus 2 the standard deviation on the regression channel, that perks our ears and prepares us so that when the price starts to revert back to the mean, we can get in on a trade. Now, one of the nice things about following a small market basket of stocks, there are over 7,500 publicly traded corporations out there, and you don't have to follow all of them. There is plenty of profit potential with what we follow, and basically it's the big four for our monthly credit spreads. That's Amazon, Google, RUT, and SPX. Then we have the leaps, which are our financially strong stocks, and I've pared them down to only showing the ones that are about $150 and more. And there's about I think there's about 18 of those, and that's all we follow. That's all that's our market basket. So we can know from past history whether or not one of these stocks reacts at the plus or minus 1, or whether it reacts at the plus or minus 2. Okay. And historically, it will, if it usually reacts at the plus or minus 1, it'll probably continue to do that. And if you get an outlier beyond that, then your ears are really peaked, because when it reverts back to the mean, and it will revert back to the mean, then we want to look for a trade. All right. So when the price makes a measured move, or the 5-day crosses the 8, either down for a bear call or up for a bull put, that's our first entry. Now, the caveat is, if the price goes into a trend and has a pullback and then makes a measured move, or the 5 crosses the 8, that's our secondary entry. This is our entries. This is the only time we enter. It's the only time we enter. And I don't take all of them. I don't take all of them. There's a number of factors I look at. Is the portfolio balanced? Has this one been in a nice trend for a while? Is this one kind of going sideways and in a channel? But you don't have to worry about that, because the alerts I send out, I kind of have already gone through and kind of picked what I believe are the best of the best of the ones that we see. That doesn't mean that you, as a trader, can't look at your favorite stocks. I had a mentee who worked for Kroger, and he loved to follow Kroger, and we talked about it quite extensively, and he did very well on following Kroger using these rules. Okay. A lot of people like Apple, and that's fine. You pick your own little portfolio. Pick stocks that you like and make your own portfolio. The rules stay the same. The rules stay the same. Now, the beauty of our strategy is, once you're in, we know immediately when we're going to get out. And that's either when we have a measured move opposite the trade, or the 5 and crosses over the 8. That's the exit of the trade. Or if it's profitable, we're going to let it run until it comes to one of the Fibonacci's. Okay. And that's the major rules. Now, like I said earlier, sometimes I go against those rules. I've been doing this for a long time, and I see if something actually makes a measured move to the downside, or the 5 crosses the 8, but there's support or resistance, or we just got in the trade, or something like that, I might tend to stay in and not exit. But I'm very keen and very aware of the fact that if I get a chance to get out of that trade, I'll probably take it, because it didn't go according to what we were looking for. Okay, Richard, good question. Good question. Richard says, why doesn't the Thinkorswim show me the 127 in the fib extension? Or how do I add it? Good question. I think we're done here. So let me go ahead and take that down, and let me go over and show you what to do. Okay, here's the fib tool, and when you come down to the tools, which is right down here in the lower right hand corner, Here's the fib extension tool right here. Okay, here's the fib regression. You got trend lines. This guy right here is the pan. I can put that on here and move this chart around if I want. Those are the major ones that I use. But let's take a look at it, Richard. If I have the fib extension, and let's just do one really quick. Let's go from here to here and down to here. Okay. All right. Let's and mine shows the 127 because I have put that on there. How do you do that? All right. So yours will show the 161. So if you right click on 161 and say edit properties, you're going to come up with a screen that looks like this. And notice it has coefficients right here. And the 127, believe it or not, which I love the most, does not have it. Okay? They do not have it. So what you have to do is you have to come down here and add a curve. Okay, just add a curve. And if you add a curve, you can put in anything you want. Okay, so I just put in the 1.272, and then once I have that saved, now I've already got that, so I'm not going to save that. You come down here and you say save this now as your default. Okay, and the other things you want to do is I always want to look at the 127, 161. Very seldom do I look at the 261, or way seldom even the 423. So I put a check mark here. All right, and so it will automatically not only show me the 127, but it'll automatically show me the 127 and 161. All right, I'm going to cancel that. Does that answer for you, Richard? Play around with it, and see if you get it. Does Tastyworks have these tools? Tim's saying, I don't use Thinkorswim. You know, I wouldn't be a bit surprised Tastywork does, Tim. They are somehow affiliated with TD Ameritrade, I think. And what you want to do is the best thing to do. I mean, when I have a question for Thinkorswim, I just go up to the help thing right here, click it, and say contact us, and there it is. I just send them an email. I wouldn't be a bit surprised, Tim, that they do, because the Fibonacci's, especially the extensions, are a great tool, and most platforms do have it nowadays. Okay, so I just send them an email. Richard came through and said they do, so Richard might have Tastyworks and he knows. So that's what I would do, Tim. Okay, good. Joseph comes in and says Tastyworks is not affiliated. Tom Sosnoff, who's a multi-millionaire, started both Tastyworks and Thinkorswim, but sold Thinkorswim to TD Ameritrade. Good information, Joseph. But originally he did have them both, so therefore I believe that the platforms have got to be pretty identical. Okay, so let's go over and let's take a look at the chart of Visa. And let's go back to here, which was a low. And let's look at the first measured move. Okay, it goes up, up, up. And this is the first intermediate high, if you will. Okay, then it pulls back and makes a low, which is a higher low than this, okay? Then it comes up here and makes a little bit higher high, but doesn't make a higher high for this one, okay? It doesn't make a higher high for this one. So what you've got here is there is the low, and this is a higher low. So the first measured move goes from, and let me get the trend line. First measured move goes from here to here, from there to there. And then it makes a measured move right here. All right. That's the entry point right here on Visa. Now, a lot of times, the first measured move after a major drawdown is a good one to know how far this might be gonna go. Okay. So once I have a measured move established, I can come over here to the drawing tools, click on Fibonacci extension, click on the low, drag up to the high, click on it, and drag back down to the higher low. And that's going to give me the 127, 161. Now the 127, I love the 127 because it hits that more often than anything else. And I know that at the 127, it's either going to consolidate or pull back or blow right through. Well, what's Visa doing right now? And what has it done for a while? It's come up to the 127 and it's just kind of sitting there going sideways. All right. And that's off of this first measured move. Okay, let me get rid of this because I don't want to have too many drawings on my screen. And I don't want to see this just yet either. So because I had a measured move to the downside right here. Okay, and let me show you that. Came down here, then it came back up, but didn't make a higher high over here, okay? If it would have come all the way up here, that would have been the measured move. That would have been the first measured move. It did not, okay? It made a lower high. All right. Then with this guy right here, it made a lower low. That is a measured move to the downside. However, it is still trading higher than the previous low. So the question is this a tradable move? And the answer is not really, because see, by the time you had a measured move, it was all the way down here. And I can come over here and put in Fibonacci extensions by going from here to here and then dragging back up. And look at that. That's within a tick of the 161. Before you could even, that measured move, before you could even get in, it was down to the 127. It came to the 161 and halted. I would not have traded that at all because it's too late. There's not enough, you know, as soon as you get a measured move, you can put in the fibs and you can see, hey, this move is over. And the good possibility that it's gonna halt here and I'm going to have a higher low. And then when I have a higher high, now I've got something that I can use. And that's what I showed you in the first one. We took it from here. We took it from the high down all the way down here to the low. And then it made a measured move right here. Okay. Okay. So let's continue on. Oh, remove. There we go. Okay, and let's remove this. Okay, so let's put this guy back on. Okay, so we made a measured move. All right, so let's say you got into the trade, and that's fine. That would have been a good point to get in. All right, but it immediately starts pulling back. It immediately starts pulling back. Well, let's see. We had a low right here. Well, not quite. Yeah, that's almost at the same low on April 7th. You'll look up here, and the low on April 7th was or April. Yeah, sorry, April 7th. The low was 168.1, okay? And the low on April 8th was 167.93. Yeah, a little bit lower, but boy, that's not a lot. I would, I'm not gonna, but this one is a low, for sure. Then it makes a little bit of a move up, but not a higher high, okay? And then it heads on down. So it's almost very similar to what we saw on the first major move to the upside. So we have another one to the downside. Let's see what we got there. $127 came down to the 127. And halted. All right. Plus, it hit the -1. Okay. And Visa, except for during the coronavirus and the scare, usually goes from +1 to -1. So that is a good indication that, hey, this move is probably over, or it might go a little lower, but the probability it's going to still be a higher low, because here's the -2. So we're still in an uptrend. We're still on an uptrend. All right. So then we have we go from here to here and here to here. Okay. That is a tradable move right here. Right here. Because we've established that we're in an uptrend. We had a measured move. We had a measured move down here, but it halted. Then we had another measured move down here that we halted. We probably wouldn't have traded either one of these, basically because by the time we had a measured move, the trade was about done. Now we're back to a measured move to the upside, and that is something that we want to take. So let's go down here and see what we got. Let's put on drag, click, drag. Okay. Okay, so this one comes up to the 127, a nice little move. We had a nice little move there. All right. Very close to the 161, but what do we know about the 127? It's either going to consolidate or pull back or blow right through. What didn't blow right through? So now you have a decision to make. Okay. Do I want to take profits here? If you do, that's fine. That's fine. The other one is, do I want to see if I can get it to the 161? I'm in an uptrend. I'm in an uptrend. Good possibility it's going to go to the 161. However, if I want to take profits, you can do it right here. No problem. No problem. Because you get another measured move that goes from this low to this high, back down to here, which is a higher low. Okay, let's see what the fibs tell me about that. Okay, when it makes this measured move, it reinforces the fact, hey, I didn't have a measured move to the downside. It reinforces the fact that, yeah, I'm probably going to go to the 161. Well, it doesn't, not only did that, it came to the 161 right here, and then it goes through, you know, what do we know about the 161? Well, it's either going to consolidate or pull back or blow right through. It didn't blow right through, so it's probably going to, you know, consolidate or go back down. Doesn't make a measured move, so you hang in there. You hang in there, and up it goes to the 127. Bingo. Okay. Now you can come all the way back here. You can come all the way back here and remember this first measured move we had. And there's the 127, and there's the 127 of the latest measured move, and they're almost identical. And you could say those two are clustering. That is a good time to take profits. Bingo, we're out. Are we out of Visa just yet? You didn't get the alert just yet, but be looking for it. Okay, and that's how you use measured moves and Fibonacci's together. Okay, and you look at this little exercise we just went through, and you say, boy, that looks awful easy. That looks awful easy. Why can't I do that? Practice. It takes practice, a lot of practice. I've been doing this, how long, Steve? I've been doing this for a long time. And so I've done measured moves and Fibonacci's for many, many, many years. And I've seen the power of these things, and I've seen how they come to within a tick of the Fibonacci's, because the Fibonacci's are nothing more than fear and greed put into numbers. And that's what they are. So be looking for us to get out of Visa right here. Now, let me go over to our monitor tab and see if that makes sense. Yep, it makes a lot of sense. We've made about 83% of the potential. What I'm looking at is that dollar, which is 10% of margin, and we've made 83% of that. So this would be a good time to get out of here. Okay. Now, the other thing that I look at when I'm putting together my portfolio and everything, and the reason why I'm hanging in there with Danaher and waiting for a little bit of a drop, even though it is, I should have exited because the 5 did cross over the 8, but it happened the day after I got in. So I look at this and I say, well, okay, I'm going to hang in there for a while. Well, You know, I'm glad I did, but I'm still out of bounds. But as far as the rest of my portfolio, I can afford it. I can afford to stay with this just a little bit longer. And if you know how to do this on Thinkorswim, you just go to monitor activity and positions, and it gives you the total portfolio that you have and the value, P&L for the day and P&L for the opening. And it gives you an idea of how you doing? How are you doing? Can you maybe hang in a little bit longer with some trades? You need to get out right now. You know, how are you doing? And this is what I look at a lot. Now, Steve, you had a question a lot earlier on measured moves, and you haven't raised your hand. Do you still have it? You sure do. All right. Okay, Steve, question.
Well, you pretty much answered it. I wasn't looking for a level, a breakout level. I was looking for a level where it might stagnate. And you showed me perfectly well how to do that using the measured moves and the fibs. So you in effect answered my question.
Okay, cool, cool. So yeah, the stagnation, you know, we're pretty much in a stagnation right now with the 127, and it's either gonna stay here for a while or drop, and I'm fine with the profit we had, and now's a good time to take that profit when it hasn't reverted back just yet. It's still in that stagnation period.
And another question I have is that there's probably no way to get a feel for how long the stagnation is going to last, is it?
No, there really isn't, Steve. There really isn't.
Because you can look at Bollinger Bands and they look real pretty, but they're past tense.
Yes, they are. They are.
So,
And to be quite honest with you, so are the regression channels. However, the regression channels have got, you know, 3 months of history on this particular chart, and they kind of give you a kind of a glimpse of where you're headed.
correct.
So I like the regression channel versus the Bollinger Bands.
Okay, well, thanks a lot, Dale.
Okay, you're welcome. You're welcome. Laura says, hi, Dale, DHR is scaring me. Don't be scared. The premiums seem to be inflated. Do you know why? I have no idea. Do we still believe in the trade? Yep. I just spent a lot of time talking about it. But let's take a peek at it. Let's take a peek at it. Let's go over here to look at DHR. Okay. You can see that DHR has made a very strong move here, but lately it's been kind of it's sitting there a little bit, sitting there a little bit. Okay, and it actually made a major move to the downside the day we got it. It decided, hey, I'm going to go back up. Well, it didn't. Let me blow this up a little bit. Actually, let me go back and maximize this. And let's take a close peek at this guy. Okay. So, came down here. Then it came back up. And it made a major move right here, which I chose not to get into because by the time I saw this measured move, it was having a big up day. All right. So I waited. And then it came down and it made a very small measured move right here. But that wasn't enough for me to make any trades on it. And I was glad because the next couple of days were up. Then we had some more down days and it made another measured move right here. I wasn't really convinced until it made this measured move right here. And that's when I decided to get in. Okay. Now, and this happens every once in a while. You get in, and then immediately it goes against you, and the 5 crosses the 8, and it's like, oh man. Well, you got to give it a little bit of time. You just have to give it a little bit of time. And the last 2 days have been bearish days. Okay. The 5 is still over the 8. When I get a drop here, I'm going to get out because this, I'm not going to get out when it was doing this. The other thing is that it hasn't made a measured move to the upside. I mean, here was the measured move to the downside. So it has to come up here, come down, and then here it has to come up here again. So that would be a measured move to the upside. Okay. Now, I can come in here and I can create an alert. And then when it goes at or above that point right there, I want the computer and my email to tell me, now you better get out. Now you better get out, okay? Because it has made a measured move to the upside. And there was resistance, here was resistance, here was resistance. It busted through that resistance and it's heading up. Now I'm out. Now I'm out. And I got to lick my wounds, Laura. I got to lick my wounds because that's a losing trade. But I gave it every chance to recover a little bit, but I'm not going to let it get out of control. And as long as it stays below this point here, I'm going to let this baby work. Because, really, it's been in a channel for the last since May 6th. It's been in a channel. And this was the ceiling. This was the ceiling. This was the ceiling. Is it going to head back down? That would be nice. But if it heads up here, I'm out. Does all that make sense, Laura? One other question Laura had, and she said, is doubling our position a viable option for managing this scenario? No. I never throw good money after bad. Never, never, never. This is a trade that went against us. Now we're battling this to save a little bit. And if we're able to save a little bit, I'm going to get out. I'm not going to throw good money after bad. Okay? All right. Okay. As you saw here, everything else is just going peachy. So let's go through it. Let's go through our Hershey bear call. Okay, see how far up we've got Hershey, and even though the 5 did cross over the 8, we came down to the 261 right here, but Hershey has been so weak that I'm giving it a little bit of time to show me some more weakness. And Hershey, we're up a good chunk of money, so why not let it work? Why not let it work? Johnson & Johnson, we have a bear call on Johnson & Johnson, and it has been going right down. The 5 has never crossed over the 8, and we'll just continue to hold on to Johnson & Johnson. And then the last bear call we have is Costco, and Costco has been sitting there just channeling like crazy. You know, there's the channel, and we had a big down day today. How we doing on Costco? We're doing just fine. So just let this one work too. And the last one we have on our financially strong is a bull put on Visa. And we talked about at great length Visa. Visa's having an up day. Be looking for an alert this afternoon as a possible exit on a very profitable trade on Visa. Okay, so then we have 2 trades on our monthlies, and the first one is the SPX. And the SPX, the 5 is over the 8, and it continues to just go right along here. The SPX, I think, was very close to making 100% of the profit I'm looking for. So, but in the meantime, it's just chugging right along here. So there's no reason for me to get out at this point. No reason for me to get out. See, it came up to the 127, and it is kind of pushing right along. Okay, so we let this one go. Let this one go. So you're going to go to 161? I don't know, but that would take it up to the +1 on the longer term chart. It looks like it would take it up to about +1 on the shorter term chart too. That would definitely be a time to get out, but we will probably be out before then because it has done quite well, quite well. The other one we have is the RUT, and the RUT is another example of the 5 over the 8 and the real strong trend there. Hasn't come up to the 127 just yet. So we're just going to hang in there with that one. The RUT is doing quite well too. Now, what I want to point out is that we, at one point in time, we had made a bunch of money on Google and decided to get out right here. And it's just been going sideways from that point in time. And we decided to stay out of Google and jump into RUT, and the RUT is going up. So that was a good decision to do right there. Okay. Okay, so that's what we've got. We've got monthlies on SPX and the RUT that are doing quite well. We've got a bull put. These are both bull puts. There's a bull put on Visa. We're probably going to get out. We have a bear call on J&J, looking good. Bear call on Hershey. You know, I was hoping that Hershey would push a little lower. You know, it's like, aren't we going to get? We've been hovering right around this point for a long time, but I'm going to hang in there with that. Costco, we're looking good on Costco, and I went through quite a lengthy discussion on DHR and what we're going to do about that. Okay, so that's what I had to talk about today. The floor is yours. Any questions at all on anything we talked about? Anybody want to look at any particular stocks? Any other things you want to look at? The floor is yours. So you can either raise your hand and I can unmute you, or you can type something in on the question box. And Joseph has just typed in Zoom. Is that the Zoom meeting? Must be. Must be. And that's something I would never trade. That is really interesting. That is really interesting. And this is I don't know when the IPO for Zoom was, but first of all, it was a penny stock, very cheap. These are things that I don't even look at. And then all of a sudden, everybody was stay at home. Well, what am I going to do when I stay at home? Well, I'm going to Zoom all my family, and that's what we do every Saturday night. And that's why Zoom zoomed up here to 60. Well, if you would have said to yourself, Zoom is really going crazy, and I am going to buy Zoom at 60. What would you be saying to yourself right now when it sits at 7? That is why I do not touch these cheapos with a 10-foot pole. Okay, Tricia, good question. Tricia says, let me put this back to reality. When entering a trade after a measured move, should we wait for a red candle before entering a bear call or a green candle before entering a bull put? Very interesting. Very interesting. I've never looked at it that way. However, I did when we were looking at DHR. I did show you that. Let me go back there and take a peek at that. I did show you that right back here it made a measured move, and I didn't get in basically, Tricia, because within the first hour this baby was trading way up here. And that's an interesting concept. That's kind of like a secondary confirmation. If we were adhering to that rule, we wouldn't have gotten in back here because that was an up day. But basically, what you're doing is you're wait on the day it makes a measured move. You're saying, because you don't want to wait another day. You don't want to wait around. When it makes a measured move, it's time to get in. But I kind of like the concept. If you're getting in with a bull put, wouldn't it make sense that baby that day is going up? And if you're getting into a bear call, wouldn't it make sense that one would be red and going down? I have to look into that, Trisha. I think that's a nice observation. All right, good. Looking at the wrong Zoom. All right, I was looking at the wrong. I don't know what. Well, what was that Zoom? Okay, there we go. Current price is 203. Great, that's great. Still worth looking at the chart. Okay, let's see. There's the first minor measure move right there. Let me blow this up a little bit. Then we had another measured move right here. It was Trisha's red candle day. But then it made another measure move right here. So the only thing I don't like about this is, yes, indeed, it made a measure move. And yes, indeed, the 5 is over the 8. This would have been a good time to get in. I wouldn't get in now because look where it is. Look where it is. It's at the very tippy top, and not only that, were earnings just recently? Yeah, earnings are today after the market closes. So I definitely wouldn't get in on that. Joseph says it might be a good short. Definitely want to see what goes on after the market closes and see what happens tomorrow. And just because it's up here, just remember, is not make it a good short. We'd like to see it reverting back to the mean with either the 5 crossing below the 8 or a measured move. Occasionally, I will make a trade when it hits, when I think it's way overbought or oversold. Occasionally, I'll do that, but usually on the SPX weekly, not on my leaps. See, this would be a leap because it's only $200. Okay, so I want to see this revert back to the mean before I would jump in with a bull put on that. And Steve says, take a peek at the open interest. Good, let's do that. Let's take a peek at the open interest. Let's say we want to go out and do a leap. Don't want to go all the way out here. Let's take a look at this one. Let's take a look at this leap. And just if we did a, well, we don't want to do either one right now, but let's just take a peek at the open interest at the money. It's got some reasonable open interest. I would be okay with this open interest. That's pretty reasonable. Okay, okay. That was good. Anybody else want to take a peek at something? Anybody else want to take a look at some stocks? Any questions? Got a couple more minutes. Richard's got his hand up. Excellent. Let me unmute you, Richard. Richard, how you doing today?
Good, how are you?
Very good.
Good. I was just wondering about maybe doing a 10-day or something, a weekly on SPX.
Let's take a peek at it. We're right here, and it just made a measured move to the upside right here, Richard. It is the short, the 10-day, 30-minute is trending up. I might want to see, it did pull back a little bit. I might want to see it go up here a little bit higher. But if it does, let me create an alert on that one, at or above. If it does, I think that might be a good time for a bull put short term. I think that's a good observation, Richard. Yep.
Yeah, that's what I'm looking at. I was looking at the same thing. So appreciate it.
Because it is, if you look at the regression line, it is trending up, but it's sitting right on the line, which means if it breaks through here, it's got some room to run. So that's I'm glad you brought that up, because we haven't had what I believe to be a good weekly trade in quite a while, basically because of all these gaps. They're scary. It seems like it always wants to close the gaps, but lately things have not been. Wonder what the volatility looks like. That was good, Richard. Thank you. Any other question?
That's good. Thank you.
You're welcome. You're welcome. Let me just go in here and Okay, yeah. You can see that the implied volatility, and let's go back in time and see. We've dropped below. Remember, we were right here when we were talking about this before, and I said, well, we're still pretty high here. Let me put some more time on here. Let's go back. Let's go back 6 months. See, this is low volatility back here. And even though, you know, when we looked at 3 months, it looked like it was pretty low, but it's still not, it's still fairly, it's not fairly high. It's slowing down. You can see it's slowing down. It's all the way back to back around here when the virus first hit the fan. So, you know, that's good. It's a good trend. Okay, good, everybody. Good webinar. I will have this compressed and on the website by about 2 o'clock, 3 o'clock. And what I would just say in closing is just pick a chart, any chart, and practice measured moves and Fibonacci's. They will help you a lot, but it does take a lot of practice. And if you see something that you're puzzled by, take a screenshot and send it to me, and I'd be glad to chat with you about it. Okay? All right, everybody, good trading. Bye-bye now.